Coming up on Business Incorporated, South Africa's economy expected to contract by 7.8% this year. Zambia clinches major debt deal with China. And Egypt, Japan agree to complete procedures for implementing fourth metro line. Many thanks for joining us on Business Incorporated today. I am Bisi Adebayo. Let's begin the program right away with intraday numbers coming from the markets. But here in Nigeria and in Egypt, the markets are closed for the Eid al-Maulud celebration, but the NSE closed positive on Wednesday. It was up 1.58%. Elsewhere, the JSE gained 0.46% at intraday, while Kenya closed down on Wednesday. Also in the UAE, the markets are closed for the Eid al-Maulud celebration, but investor sentiments were negative. But the Abu Dhabi index shared 0.49% on Wednesday, while the market in Dubai was lower by 0.15%. Markets in the Middle East are in negative territory at intraday, with the Qatari index shedding 1.35%, while Saudi Arabia's index lost the most with a 2.11% decline. And in Europe, the markets are mixed today as investors digest new lockdown measures in France and Germany and await the European Central Bank's latest monetary policy decision. Conrad Boson will be telling us more about all of this. Good afternoon, Conrad. It's good to see you. Now, the European Central Bank's governors have met in Frankfurt today. What will ECB chief Christine Lagarde tell the public at her press conference? Is she expected to announce new stimulus measures as the corona pandemic is flaring up all over Europe?
Well, BC, no new stimulus measures are expected from the European Central Bank today, despite the risk that the pandemic might choke off the economic recovery in the countries of the euro. But several reasons are quoted by people on the trading floors for why they don't expect the ECB to act today. Reason number one is the extraordinary asset purchasing program that the ECB introduced earlier this year when the pandemic started. PEP is the name of this program, the Pandemic Emergency Purchase Program. It has a volume of 1.35 trillion euros, and until now, only about half of the money has been spent. So there's no immediate need for the ECB to come up with more quantitative easing. Reason number two is that in this crisis, fiscal policies, spending by governments is perceived by most experts to be the more effective, the better remedy against the corona recession. You know, if you are a restaurant owner, for example, who has to close down shop, you don't really benefit from low interest rates by the central bank or from a central bank that buys assets on the markets in order to stabilize the financial system. What you need is direct help, for example, direct cash injections by the government.
Companies have reported that third quarter earnings, and one negative surprise is Nokia, the network systems provider. What exactly is the problem? I mean, with 5G technology around the corner, Nokia should actually have a lot of work ahead.
Well, yes, and given the problems that Chinese competitor of Nokia, Huawei, has, many people on the financial markets had expected that Nokia would, capitalize more on this ban of many governments against Huawei technology. But it turns out Nokia has not managed to do that, at least not the way it had been expected. One reason is that 4 years ago, Nokia took over for $17 billion Alcatel-Lucent, and the integration of this business still continues. It's not always been going smoothly, and it's sometimes problematic. What's more, the new boss of Nokia, Pekka Lundmark, even seems convinced that selling hardware, which is often produced by this Alcatel-Lucent or ex-Alcatel-Lucent business, is not the way to go. Lundmark wants to change strategy towards a more network as a service business model. This shift of strategy right now right now when, the 5G technology is being installed everywhere, this, of course, is negative for the operating business of Nokia and also, of course, to earnings and margins.
Just before I let you go, Conrad, let's talk about the appointment of a new leader for the World Trade Organization. Of course, that is in doubt now after members failed to unanimously come to an agreement. Nigerian Ngozi Okonjo-Iweala was supported by every member country except the United States. What exactly is the problem for the Americans?
Well, BC, what I can tell you, it's not her credentials. Ngozi Okonjo-Iweala really has what it needs to do the job. She has an international career background. She has a degree from Harvard. She even has a United States passport next to her Nigerian citizenship. The problem for the Americans is that she might be too close to China. Her candidacy is also backed by China. And given the many relations that China has with many countries in Africa, some in America are afraid that she might become too close and too favorable of China. Another reason might be that Ms. Okonjo-Iweala in the past often has criticized the industrialized nation and has pleaded for better conditions for poor countries. She, for example, criticized that many African nations in the past were forced to open up their economies too quickly. These were statements somewhat perceived by the Americans as criticism of their position and of the way how they treat international trade. Of course, it's going to be very interesting to see what happens next week when the U.S. elections, the U.S. presidential election happens. If Trump really loses this election, his administration will immediately be a lame duck, which might, make the position of the Nigerian candidate Ngozi Okonjo-Iweala a bit more stable and a better one.
Well, let's just keep our fingers crossed, Conrad. Thank you, and we'll see you again tomorrow. Now let's turn to the UK, where Juliana Olayinka will be telling us what's driving the markets at Intraday. Good afternoon, Juliana. Let's begin with this one coming from Lloyds Banking Group, which reported stronger than expected profits after cashing in on a surge in demand for home loans. What are the facts behind the figures, Juliana?
Good afternoon, Bissy. Well, the facts are that Britain's biggest lender really benefited from the housing market boom that we've seen since lockdown. Thousands of first-time buyers are taking advantage of the fact that on some properties there is a stamp duty holiday in place until March, and Lloyds are seen to have reaped the benefits from that. This is the biggest quarterly increase that they've had in mortgage applications since 2008, and that's reflected in their third quarter results, which shows that they've had profits of over £1 billion. This is more than double what was expected. So they're pretty happy with that result. We do have a statement actually from the group chief executive, Horta Osorio, who said, although our performance has clearly been impacted by the pandemic and the associated challenging economic environment, I am pleased that we are now seeing an encouraging business recovery and with impairments significantly lower to return to profitability in the third quarter. Now, impairments have always damaged banking profitability, especially because interest rates in this country are historically low at 0.1%. But as I said, that housing market boom is really reflected in Lloyds' results, and the fact that they've got £1 billion in profits is quite nicely for them at Intraday.
Now, Juliana, whether we like it or not, COVID or no COVID, Christmas is already around the corner, and advertisers are expected to spend almost £725 million less than what was seen during Christmas last year. Of course, that's coming from industry forecasts. Of course, COVID, once again, is responsible for this, isn't it?
COVID is responsible. At this time of the year, especially in London, it's supposed to be feeling a lot like Christmas. And it really isn't, to tell you the truth. Although the fact that this £790 million is only a 10% drop just shows how much is spent on Christmas. I think it goes into about the £7 to £8 billion worth of advertising and marketing revenue, especially our viewers in London who use the Tube, you usually at this time of the year start to see lots of advertisement for some of their big extravaganzas, like, for example, Winter Wonderland in Hyde Park, which has been cancelled this year, as well as a lot of, visiting Santa's grottos and other big events that usually pull in the crowds and rake up all of the money. The fourth quarter of the year is typically known as the golden quarter because this is where businesses can really reap back the struggling months that they had beforehand. This is not likely to happen, and the information that's coming out of the Associated Advertising Agency this afternoon really does confirm that. I think, according to their reports, the industry or the sector that's going to suffer the worst is cinemas. We know that several cinemas have closed down or shut during the week because there are just no Hollywood blockbusters. In fact, even some of the ones that we were expecting to come out that wasn't hampered by filming with the pandemic have extended the release date or pushed back the release date till next year. So 60% of their revenues will be falling. Even on TV, again, a lot of our viewers will be familiar with the famous John Lewis, Marks and Sparks adverts. They've been reduced. So it's striking a delicate balance. I think that a lot of big companies don't want to be overdoing Christmas because they don't want to be insensitive. But then, of course, they don't want to miss the opportunity to do Christmas because this could be an opportunity to cheer up the nation. And I'm happy I've said Christmas a couple of times there, and I'm already cheered myself. So it does continue, but the golden quarter is unlikely to be anything but that.
Well, at the end of the day, this could just be a Christmas with a difference. But just before you go, Juliana, take us through the market numbers at Intraday.
At Intraday, the FTSE is increasing on its gains in the morning after that plummeting of 3% fall, taking the FTSE to a 6-month low yesterday because of those increased lockdowns which we're seeing across Europe, likely to come into place anytime soon in Britain. The FTSE All-Share in Intraday is up 0.19%. The FTSE 100 is up by 0.12%, and the FTSE 250 is up by 0.36%. In currencies, the pound is up on the US dollar by 0.12%, up on the euro by 0.32%, and down on the Japanese yen by 0.08%. It's worth mentioning that the BT Group is one of the biggest risers on the FTSE 100 at Intraday after announcing that they will begin paying their dividends again in 2021-2022. Bissy.
So some good news for the shareholders there. Thank you, Juliana. Do enjoy the rest of your day.
Thank you.
And in Asia, shares fell today following an overnight plunge on Wall Street as coronavirus cases continue to surge in the West. The sustained increase in coronavirus cases seen in the U.S. as well as across Europe likely weighed on investor sentiment in the markets. Of course, in Australia, stocks led the losses among the region's major markets. We saw the S&P ASX 200 decline 1.1%. And South Korea's Kospi fell 0.79% on the day, while the Hang Seng Index was down 1.61%. Mainland Chinese stocks bucked the overall trend regionally as they were up. The Shanghai Composite was 0.11% higher, while the Shenzhen Component rose 0.983% to about 13,519.66. Over in Japan, the Nikkei 225 declined 0.37%, while the Topix Index shed 0.1% at the end of its trading day. And stocks in the U.S., the stock futures in the U.S. Rose in early trade after the worst day for the market in months. Futures tied to the Dow Jones Industrial Average gained 180 points, while futures for the S&P 500 and the Nasdaq 100 also traded in moderately positive territory. The move in futures come after a sharp sell-off during Wednesday's session that extended Wall Street's losing streak. The Dow lost 3.4% for its fourth straight negative day, and the worst loss since June the 11th. Let's talk oil prices now. They recovered slightly today from a 5% slump that we saw previously, gaining support from the prospect of tighter short-term supply, with 2/3 of U.S. output shut in the Gulf of Mexico as Hurricane Zeta slammed Louisiana. Market watchers said technical support was a factor as well, after signs of a growing global oil supply glut and a second wave of coronavirus infections sent prices tumbling on Wednesday. US WTI crude futures edged up 0.19% to $37.46 a barrel, while Brent crude futures were up 0.1% at $39.16 a barrel. Hurricane Zeta's impact is expected to be short-lived, and the return of U.S. production will add to existing oversupply as Libya rapidly ramps up output after an 8-month blockade. And gold edged up today after a plunge in the previous session as surging global coronavirus cases and fears of a contested U.S. presidential elections spurred demand, although a strong dollar capped gains. Spot gold rose 0.2% to $1,881.16, while U.S. gold futures were up 0.2% at $1,882 an ounce. Silver was flat at $23.41 per ounce. Platinum was steady at $867.74, while palladium was 1% up at $2,259.51 an ounce. When we return in just a moment, we'll bring you more stories across Africa. Please stay with us. Welcome back. Egypt and Japan have agreed to hold intensive meetings between the Tunnels Authority and the Japanese JICA to speed up all procedures for starting the implementation of the fourth-line subway project in light of the two sides' commitment to achieving all the terms of the financing agreement signed. Egypt's transport minister explains that the contract for electromechanical systems for the two phases has been completely terminated with the consortium of Mitsubishi, and a contract for mobile units with Mitsubishi International is underway. On his part, the Japanese ambassador praised the efforts of the Ministry of Transport in developing all sectors of the system, stressing the Japanese side's keenness to continue cooperation with the Egyptian side in implementing such important projects. Zambia says it has reached a deal to defer debt service in respect of a commercial loan facility insured by Sinosure that were due in October on a loan from the China Development Bank. According to the Finance Ministry, Zambia owed CDB about $391 million at the end of 2019, about a tenth of the $3 billion it owes Chinese entities. The Treasury Secretary, Fredson Yamba, says the deferred interest payment is now payable on April the 25th, 2021, and the deferred principal rescheduled over the life of the facility. Zambia missed a $42.5 million coupon payment on one of its Eurobonds that was due on October the 14th, but has a 30-day grace period before it goes into default. And as a result of the devastating impact of the coronavirus pandemic, South Africa's economy is expected to contract by 7.8% this year in real terms. According to the National Treasury, GDP growth is expected to rebound to 3.3% in 2021 and to average 2.1% over the medium term. Based on this projection, the Treasury says the economy will only recover to 2019 levels in 2024. In recent months, government, business, labor, and civil society have developed an economic recovery plan, recognizing that many plans failed to translate into action. The presidency and the National Treasury have established Operation Volindela, an initiative to accelerate effective implementation of structural reforms to boost the rate of sustainable economic growth. Meanwhile, South African Finance Minister Tito Mboweni has allocated 10.5 billion rand or $641 million for the embattled state-owned airline South African Airways to implement its rescue plan, taking money from other government departments. Presenting his medium-term budget policy statement in Parliament on Wednesday, Mboweni says the government remains committed to fiscal sustainability and fiscal measures.
Is expected to contract by 7.8% this year. And the 2021 outlook is more uncertain. Job losses have been particularly severe. We table a 5-year fiscal consolidation pathway that promotes economic growth while bringing debt under control. The fiscal measures realign the composition of our spending from consumption towards investment, and support efforts to lower the cost of capital. Our revised fiscal framework puts us on a course to stabilize the debt-to-GDP ratio at around 95% within the next 5 years. 10.5 billion rand is allocated to SAA to implement its business rescue plan. This allocation is funded through reductions to the baselines of national departments, public entities, and conditional grants. This allocation is in addition to the 16.4 billion rand allocated over the 2020 MTF in the February budget for settling guaranteed debt and interest.
And as expected, mixed reactions have trailed South Africa's Minister of Finance, Tinto Mbowene's announcement of the bailing out of dying South African Airways. Let's take a listen.
The economy now is expected.
In his speech, Finance Minister Tinto Mboweni said the South African economy is now expected to contract by 7.8% this year, and the 2021 outlook is more uncertain. Allocating 10.5 billion rands to South African Airways to implement its business rescue plan, he said their approach is in line with the principle that funding to state-owned companies must come from within the current framework. This time, cutbacks are from national departments, public entities and conditional grants.
I'm not happy with the 10.5 going to SAA. Look, I think we really need to make choices now, and government really needs to decide what are actually strategic assets that government needs to have a majority stake in, and which are not. And it's really not clear to me why SAA needs to be one of those.
We welcome the decision to finally allocate that money to the airline, because without it, SAA faces liquidation and is on the verge of collapsing. So it was really important that money be made available.
Mr. Mboweni said to assist with the consolidation of spending, government is also looking at increased tax collection, totaling 40 billion rands over the next 3 years. This is broken down to 5 billion rands in 2021-2022, 10 billion rands in 2022-2023, 10 billion rands in 2023-2024, and 15 billion in 2024-2025.
I think certainly, a low point in the budget was the fact that the debt projections have been revised from a previous stabilization of 87.4%, and that was in 2023-24, and now it's expected to stabilize only at 95.3%, and that's in 2025-26. So not just a later period, and that obviously indicates fiscal slippage, but also a higher stabilization point as well, again also indicating fiscal slippage. So this is a low point because it really indicates the credit rating agencies are quite likely to downgrade us.
The Treasury said the government is committing 100 billion rands over 10 years to the infrastructure fund, of which 18 billion rands is over the medium term. Mr. Mboweni said the government's options to stabilize the fiscus are becoming increasingly limited.
There can be no doubt that the major source of excess in government spending, apart from corruption, over the last decade has been a sharp increase in the size of the public service and very exuberant remuneration of such public servants.
The minister also proposed a wage freeze for public servants over the next 3 years to support his ambition of cutting government expenditure and debt, which is crucial to avoid a full-blown debt crisis.
As NUMSA, we are dismayed and shocked that this government can act with such impunity and refuse to uphold an agreement which they signed. Workers deserve this increase.
Clearly, government's attempt at virtually freezing wages in the public service goes to the heart of why to the heart of fiscal austerity.
Finance Minister Tito Mboweni said the government is borrowing at the rate of 2.1 billion rand a day, a rate that puts the country on a path of potential default. He warns that South Africa has to avoid the fate of countries such as Argentina and Ecuador that defaulted on their sovereign debt this year. The question now is, can and will the government implement these expenditure cutbacks?
And that's our program today. Thank you for watching. I'm Bisi Adebayo.